Hi, this is Rob Warlow from Business Loan Services and welcome to my Friday Business Finance Bulletin, my weekly roundup of news, tips, ideas and strategies on raising finance and dealing with banks. So what have I got for you this week? Well, to be honest with you, it's a bit of a sources of alternative finance fest. There's a fair bit of news coming out about the alternative finance market this week. And in my tip of the week, I've got a clip from a seminar that I delivered earlier this week where I look at one key reason why banks say no. So alternative finance continues to grow, and a new website platform that also continues to grow is alternativebusinessfunding.co.uk. Now this is a signposting site set up by many of the key players in the alternative finance and crowdfunding market. You've got the likes of Funding Circle, Zopa, Crowdcube Seeders, pension-led funding. A number of them got together to put this signposting site together. And I featured it before, but basically how it works is if you want to bypass a bank or you've had a no, you pop along to their site and via a traffic light system of red, amber, green, you'll get an idea of whether an alternative funder can help you. Well, the news out this week that they just added a 12th member to the platform, and that's ReBuildingSociety. That's ReBuildingSociety.com. They're a crowdlender, established in 2013. They've already lent about £4 million out, so a good addition to that website. And there are more to come, and in fact the chairman of the site, Adam Taverner, said he's got another 27 funders out there waiting to join the platform. So if you have been pushed back by the bank or you just want to bypass the bank completely, check them out, alternativebusinessfunding.co.uk. So what about the marketplace generally? Well, a new survey out from YouGov in conjunction with Platform Black came out and said that 47% of business owners now say that they can't differentiate between any of the high street banks, and they're all very much the same. And that's good news for all these alternative funding providers because they can start making a name for themselves. So the message really from that survey is, just don't just default to the bank. In fact, do a bit of mixing and matching, perhaps a bit of bank lending, also a bit of alternative funding as well, because that's the way it's going to be. It's all going to be about partnership and collaboration. But what about the alternative finance scene generally in terms of growth? Well, a survey out which comes out now very regularly from the altfidata.com team. That's altfi, A-L-T-F-I data.com. They're looking at how much money on a cumulative basis has been lent out. And they reckon that is now past the £2 billion mark. Now, as I record this mid-September 2014, as of December 2013, it was only £1 billion. And in May, they reckon the figure was about 1.5 billion had been lent out, and now it's up at 2 billion. So I reckon annually it's a growth of about 158%. That's a startling increase in money being lent out. And so, the message again there is, you check all these alternative providers out. And this was really brought home to me only earlier this week. I had a conversation with a business owner who was looking to set up a new business. Now, the reason we were setting up a new business is that in, well, what will be now 3 days' time, his business is going to be wound up. Yep, unfortunately going to administration. Classic problem. Grew very, very quickly and essentially ran out of cash. A lot of money owed by debtors, but he just couldn't convert it quick enough back into cash to pay his suppliers, and unfortunately the deck of cards has come tumbling down. And what he said to me was, after a chat that we'd had, was, do you know, Rob, I only wish I'd met you and the team 6 months before, because we've been talking about all these alternative sources of finance, and I know for a fact that we could have helped release all that cash that he'd had tied up, and he wouldn't be in the position where he is today. But hey, do you know what? He's positive. He knows he's got a great business model, made a mistake, a victim of circumstances, but he's learned and he's getting back out there and starting again. And that's exactly what we need to see. So what about my tip of the week? Well, earlier this week I delivered a seminar for ACCA, which is the professional body for accountants, and I was asked by the ACCA to go in and talk to accountants in the Swansea area in South Wales about alternative sources of finance. And to start off the seminar, we just had a look at the current banking scene, and I shared with them some findings from a report carried out every year by Professor Russell Griggs, we looked at the loan appeal process. Now, if you've had a loan declined by a bank, there's a loan appeal process where you can go in and appeal the decision. And they go in, the Professor Greek's team go in every year just to find out why banks say no. And in this clip, I'm going to share one reason, or the key reason, why banks say no to loans which are above £25,000. Let's go to that clip now. And this is reasons why banks said no for larger applications. Top of the league, affordability. The banks believed that the business owner could not demonstrate that they could afford to pay the loan. Now, typically, that comes in the form of no management accounts, no financial forecasts. They've not been able to prove that they can afford to pay it. And again, we'll touch upon this later, of how professionals in the room, we've got a major job to educate business owners about the importance of keeping up-to-date management figures. It is the biggest delay that we have in our business when it comes to raising finance. A deal is ready to go. I say, fine, where do you audit accounts? Or haven't submitted them to the accountant yet. Okay, where the management accountant? Oh, don't really do management accounts. Banks are insisting on that, and that's the biggest thing that slows us down in raising money, is this. And that leads then to businesses not being able to demonstrate that they can afford to pay the loan. I hope you enjoyed that clip and found it useful. Now, I've talked before about the importance of keeping financial information up to date, and that's why. The bank can't say yes if they don't know if you can afford to pay the loan, and they can only assess that when looking at your financial information. So that's it for this week. As ever, if you enjoyed this video or listening on the podcast, please feel free to share it amongst your colleagues and give it a like on social media. It all helps. So that's it for this week. Thanks very much, and I look forward to being with you again next Friday. Have a great, successful, profitable week. Bye-bye now.